I think there's also a very serious problem, at least in the United States, with how shareholders and boards supervise managements. Boards of directors in the U.S., which is typical, include the CEO and then typically include a number of inside directors who are directed employees of that CEO. And I don't think that should be. I think the CEO ought to be invited into the board to make presentations on strategy, etc., but he ought to be excused whenever there's a vote. I think the directors ought to be completely independent and responsive to the shareholders. The question then is, where were the shareholders in all this? I mean, who was watching the store? And here I partly blame academia, because academia came up with the solution that you could lower your risk as an investor by globally diversifying. And global diversification sounds good to any individual investor, but when we all do it, nobody's watching the store. Everybody, because of global diversification, ends up with thousands of investments. Or as an individual, you put your money in mutual funds or index funds, you certainly don't read the proxy statements of individual companies, and you probably don't do a good job supervising the managements. So the managements are pretty free to run willy and do whatever they want to do. We spoke about the rating agencies, but the investment banks, the commercial banks, the rating agencies, there's a huge series of middlemen that have been created because they are the experts that these diversified investors need to make investments. But the presumption is that they were motivated to improve your returns, and I'm not so certain that's true. And finally, there's the public, or the American public. I think they've gone to sleep. I don't know what it's going to take to wake them up, but America's now gone through Abu Ghraib, we've gone through Iraq and Afghanistan, we've gone through Katrina and watching American citizens sitting on the roofs of their houses for 5 days without water. And now Americans have lost their homes, their jobs, their retirement savings. Nobody's in the streets. There's no pitchforks. Nobody's protesting. Part of the blame is the American media. The American media in the last 30 years has completely transferred from being family-owned to corporate-owned. And corporations now own almost 97 or 98% of our radio stations, of our television stations, and our newspapers. And it's not that all corporations are bad, but corporate media is not only corporate-owned, who are very big lobbyists, but they're corporate-sponsored. They depend on their revenue from corporations who themselves are big lobbyists. So in conclusion, it's important to understand the problem, and it's important you choose between these two alternative explanations, because based on how you decide this problem was created, will determine what you think, how serious the reforms have to be. If you believe Alan Greenspan, and you believe this is completely natural, and all we have to do is just get things back to the way they were, then you do a reform which I call the Humpty Dumpty reform, which is you have your soldiers and men just put the thing back together the way it was. But if you think there's a fundamental flaw in the way we were organized, as not just an economy, but our government and the influence of corporations on our government, there's much more serious reform that needs to be done. And I can briefly tick off some of the reforms that I would suggest that you don't hear coming out of either the Bush administration or the Obama administration. Complete transparency by the banks, and I mean complete. I mean on the internet, all their assets, mark to market, all their liabilities, and all their derivatives exposure, updated daily if need be. Deal with this agency problem, that managements may not be representing boards, that boards may not be representing shareholders, and that there's lots of middlemen in between. 40% of American corporate profitability in 2007 was financial firm profitability. That's a very high cost to pay to have what are supposedly efficient markets. I think we have to downsize. I think very, very large corporations not only become monopolistic, but they do have this ability to influence your government. And I could easily see a very simple rule where if a company got to a certain market cap, you just break it into 2 or 3 other companies and give every shareholder 3 new shares for every share he holds. And you reinvigorate the economy. I think the CDS market, the credit default swap market, is a disaster. It was started initially 10 years ago to manage default risk for investors, and it was a $145 billion market. In 10 years, it's grown to a $60 trillion market which is more than all the corporate bonds outstanding in the world by a factor of 6 or so. And what's happened is it's created a spider web effect where everybody's guaranteeing everybody else's default. And so if any one node in this spider web decides to collapse like AIG, it threatens to take the entire spider web with it. So AIG can't go bankrupt. And then a little node like Lehman Brothers, we find out, can do enormous damage if it goes bankrupt. Well, that's not capitalism. One of the first rules of capitalism has to be that you have to allow bad firms to fail. And we not only have banks that are too big to fail, we have lots of institutions that are too interconnected through the CDS market to fail. I hate regulation. I've been in Cairo, I've been in Peru. I know about what regulation does to small business, but we need more regulation on these banks. These banks do not have the market to discipline them. They need somebody to tell them the amounts of leverage they can maintain and the type of businesses and assets they can hold. And finally, I would curtail the use of derivatives. I, like Warren Buffett, believe that if you have corporations utilizing derivatives to minimize their exposure, it's very difficult for an investor to figure out exactly what he's investing in. And as an example, I look at a gold mining company, and if I was bullish on gold, I might tell my broker to buy some gold mining stocks. Well, little do I know that maybe some of those gold mining companies have hedged their exposure to gold prices in the derivatives market. And maybe if gold prices go up and I think I'm right and I'm about to cash a big windfall, I'll find out that these stock prices go down, not up. So I think derivatives destroy the concept of transparency and make investor analysis impossible. And then finally, as you might guess, I'm very much in favor of getting corporations out of the government. I am a super capitalist. I believe that there ought to be enormous competition in the marketplace. I'm against any interference from the government in the marketplace. I'm also against any interference from big corporations in the marketplace. I think you ought to have lots of medium-sized competitors competing fiercely, but they should not be in the political arena. They don't have ethics, they don't have consciences. All they have is this profit motive, and it's an economic motive, and they belong in the economic marketplace, not in the political arena. Thanks very much for listening.